Okay, the last session we had on financial accounting, we stopped at cash flow, and today we'll be looking at environmental accounting and other parts of accounting as well. Environmental accounting, depreciation, amortization, depletion, goodwill. We'll just touch all those areas. So you can have an understanding of it and probably how to apply it in your own business. Very, 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 very important, very, very key in today's world. So, because of time, I'll be a little bit, I will rush it. And I know when you get the material, you'll study more on it. I will just try and touch it as much as I can. So, let's move on. Environmental accounting, that's regulation forces companies to consider the impact of their activities to adapt corporate social responsibilities in whatever they are doing. Okay, it simply means, and straight to the point, that companies, especially those that are into refining, those are into productions, most times they mess up the environment. That's a simple reality. Now, there's what we call environmental impact assessment. Before any company takes off in any environment, they have what we call environmental impact assessment. That will help you to know if this thing you're coming to do is actually good for the organization, for the environment, and what will be the impact on the environment. Is this something that can be allowed or something that must not be allowed? If the impact is something that can be controlled and all, are you going to pay for it? All these things are part of environmental impact assessment. And let me tell you, most companies, the way it's meant to be done is both the company, government, and entire people that are going to be affected. They are called stakeholders meeting. Most companies don't do that. Even when they do it, they still find a way to, pay their way out or through it and get a favorable environmental impact assessment and go ahead and do whatever they want to do. So, environmental accounting is all about getting to know what's the effect on these things and how it's being regulated, and making sure that the right registration are there and being enforced, and the public is on the public interest. That is the summary of environmental accounting. So having gotten this knowledge, it's there are realms of different environmental acts spread across multiple jurisdictions that affected companies operating. So I won't bother you with all this plenty grammar, but you understand this flaring of gas and the rest of them, the Ogoni land of Nigeria, and the one that happened there in Shell. I think Shell did that. Forgotten the country, but Shell, one of their offshore pipe was burst, and there's fuel and all that crude oil in the ocean, and they have to call them to they have to call them to come and clean it up and all. I've forgotten it's something somewhere in America sometime. So all this, so it's a reality. It's a reality that we must face. Even in your place where you're staying, make sure that whatever you're producing is not affecting the environment. Then most companies, include a section of environmental accounting in their financial statement. Sorry, their financial statements. Some detailed are required by law, but the statement also gives an opportunity to showcase environmental credentials to stakeholders. Yes. So environmental credentials society, programs and practices that assesses and manage the impact of operations on communities, fines and sanctions for non-compliance with regulations, production responsibility. The life cycles, all this. Just go through it as you get the material, please. Go through it. economic, financial implication, risk and opportunity for the organization's activity due to climate change. Do you understand? Financial assistance received from the government, like the climate change that was signed to all these people, the countries that are involved in climate change or that are more, they use word polluting the climate, are meant to pay more to see how they can reduce the effect of the environment or climate change on humanity. Human rights to go through all this, labor practices, environmental, just go through this material. Direct and indirect energy consumption, waste by type disposal method, and other. About waste by type disposal method. These days you put plastic in one side and put other things like cellophane. Okay, plastic and cellophane goes one side, paper goes one side, metal goes one side, and all that. They are all part of environmental accounting. There are some countries, I think that's Rwanda in Africa. As I speak to you, they are trying to make everything to reduce impact on the environment. You don't want to. They are reducing the usage of cellophane, plastics, and all of that. If you look at our oceans, plastic everywhere. In fact, just go do a little study on all this. You see the effects of all this in the environment. So go through this case study. The Tata Group, go through their this thing. We just go through it and see what happened or how they were able to pay back to the environment and all that. You see, Tata Chemical has established a 150-acre botanical reserve on the site of a factory in Mufapur, Gujarat, protecting indigenous and the other plant species. Just think about it. So the Indian multiple conglomerate prides itself on being a value-driven organization and seeks to protect the environment through various businesses and the support of environmental NGOs via its philanthropic Tata Trust projects include mentioned. Just go through, you'll see how they were able to protect the environment and all that, moving away from the urban area and creating things that help people to live better and all that. All right, so our own mother us greenhouse emission you have known that already, so study this also. Very, very important. How diesel and all that affects us. Like those living in Port Harcourt, there's a serious greenhouse emission issue in Port Harcourt and all. So won't bother us about this. So just go through it. It's a master class. So depreciation. What is depreciation? I'll just be straight. See, have your material to study. Depreciation is your ability to calculate an asset and remove the wearing out. As it wears out every month, you're reducing it. That's depreciation. Now, when a company buys an asset, its cost can be deducted from income for accounting and tax purpose. Depreciation allows the company to spread the cost by calculating the asset's decline in value over time. Example, you bought a car or you bought a printing machine. Yeah, let's use that one. You're printing or photocopier. Bought photocopier, let's say ₦1 million, and that photocopier is meant to last for 4 years. How do you depreciate? You calculate ₦1 million minus scrap value. Scrap value is what you anticipate to sell it when it gets spoiled within that 4 years. Then so ₦1 million minus scrap value all over. 4 years is how many months? You calculate the number of months, put it under it. Whatever it gives you, that's called the straight line method. So that's the way depreciation is done. So every month you're bringing out that money. So you enable you to replace it once that one is bad. Okay. So how it works? Read up. I've explained it. I've just given us how it works. So read it up. Good. So okay. Read up these ones. I won't bother you. Read up these ones. So need to know, fixed and tangible assets, yes. That's for depreciation. Okay. The method company uses depends on the kind of business and all that. You can menstruate on the method that you see it. Now, need to know fixed plus tangible assets, items that enable a business to operate but are not a part of trade. Yes, assets lasting a year or more equals to depreciation. Do you understand it now? Then useful and economic life, length of time an asset is fixed for its purpose and as monetary value. That's salvage to scrap value. I mentioned residual value. It can be called any of these. Worth of an asset once it has lived its useful life, often set by the tax authority. Well, let me tell us this truth. Okay, let's look at book value. An asset worth on paper at any point between its initial purchase and the salvage. Let me tell us the truth. Do you know that some assets that if you depreciate it after 4 years, it's gone? I mean, it's gone. You finish your depreciation. That means you've kind of removed all the money, but that asset is zero on your paper. But the asset is still good because of the usage. It was properly used and it's still good. At that point, your is your advantage. Yes, is your advantage. You have an asset that has I mean the value is there, but it's not costing you anything at that point in time. It's quite a big advantage. So usage is very, very important. How to calculate depreciation? I've given us this one. Purchase value minus scrap value all over useful economic life. So you do it in months, so you can bring out the money in months. So then annual depreciation, equal to annual depreciation for when you calculate the months or year, depends on how you want it. This is a common one. It's called the straight line method. Yes. So there are samples. This is it. $25,000 minus $5,000 all over 5 years. This is depreciation. Do you understand? It means by the end of 5 years, this is what the company will have. Sorry, each year rather. So each year they bring out 4,000 times 5. That is 20,000 plus the 5,000 they will sell it at 25. So there, by the end of the 5 years, they have 25,000 to replace the car. Do you understand it? Right. So that's it. So typical life of fixed assets. So I think you study these ones are very simple. Horse 3 years, computer 5 years, food bearing trees 10 years, office equipment 7 years, fence 15 years, office building just examples. 17 just examples. All right. How to apply it? Please go through. I've explained this already. Go through this. Go through this. Misusing of depreciation. The wrong method a company must choose. Yeah, the wrong methods. A company must choose a method that is permissible for an asset type. Yes. So front loading option for an asset type. Just find a method. Claim beyond useful life. Depreciation cannot be claimed after an asset useful life. Yes, I told also it's just zero, just there, but you're still using it and it's your own. And so if there's a valuation of your company, that asset will be valued in your paper. It will increase your asset, but you're not paying anything again. You're not depreciating it again. Do you understand? Yeah. Then ignoring depreciation. If a company fails to claim depreciation, it has to report a gain from the sale. Yeah, despite the loss on depreciation. Yes, if you ignore depreciation, it means that because depreciation is taken it's taken as an expense. So that means you're reporting higher profit, and government will take their tax. So you're the one losing. That's simple. It's as simple as that. So okay. That depreciation method. Okay, these are other methods. For those of us that other methods, so take your time to study it. It's self-explained. We deliberately it's self-explained. So take your time to study it. Study it. depreciation on the balance sheet where you find it, see it. Bam. I won't bother you on this. All right. Amortization, and depletion. I purposely rushing this. Please. Okay. Amortization and then depletion. Amortization simply says similar in the concept, to depreciation. Amortization and depletion are used by accountants to show how intangible assets and natural resources respectively are used. So just know it. It's the same thing with depreciation, but this one is an intangible and natural resources. So amortization is on intangible, depletion is on natural resources. The same principle. So it's something you can study also. You understand? It's very the same principle. So I wouldn't bother us on this. There are two types of amortization: one for spreading cost of an intangible asset, and the other for loan repayment. So both calculated in similar way, but loan repayment are worked on a percentage. Yeah. So this is it. Intangible assets. Do you see the way it is? This is it. The way it goes down. So very, very simple. Loan repayment, you put percentage. In this example, a company buys an intangible asset, a patent for a new revolutionary type of tennis racket for $20,000. The patent will be used for 10 years. So it costs records as 2,000. You understand? So amortization expenses each year rather than, as a one-time cost. Unlike tangible assets, a patent does not have a salvage value. So you see the way it is. Break it down until the value is gone. Very simple. Very, very, very simple. For 10 years, year 1, year 2, year 3, until we are done. 2 years each year. In 20. So in that 10 years, the time money has been written off. If it's loan, you see the way it's calculated. Loan cost of loan, yearly payment repay, year of repay, you get the percentage, and you're good to go. All right. So that's the amortization. Goodwill, very, very important. Goodwill is the extra money paid when a company buys another company, or you're making an investment. Let's say your land to live asks for private placement, and we evaluate it is $10 billion, and we said, okay, you pay us 15. Out of that 15, the company is 10 billion, but they're paying 15 because of goodwill. So, and most time, goodwill goes to the owners of the business, the people that own the business before you are coming in. So, in your book, goodwill is an intangible asset. Yes. So, this is how it's recorded. Go through it also, please. How to calculate depletion. Then depletion is, okay, yeah, goodwill. Good. So how does the value of goodwill falls through negative publication and that? So just go through this. Now, note, intangible assets, non-physical assets such as patents, trademark, brand recognition, and copyright, their values is sometimes subjective. Yes. Patent, a license granted by a government or authority giving the inner exclusive right to make or own, for making or owning an invention. So that's it. The calculations here, please. So I won't bother us too much for all that. All right. Take your time to go through it. All right. So we've come to the end of this session, and I deliberately ran through it. Yes, deliberately ran through it so we can have a robust discussion. And I know you've caught one or two things. I want to focus more on our discussion so I can go back to areas that you want us to touch and all that. So one more time, it's been a long journey on this, but I'm happy we gotten to this point. Can we please, the floor is open to everyone. The floor is open to everyone. Can we just discuss on this? what are the areas you what are your benefits or what are your take home? What have you gotten today? And what are the areas you think we should, you feel like you need more emphasis? Good. Go ahead, Mr. Steven.
Good morning, sir.
Good morning, dear. How are you?
Oh, fine, thank you. It's a wonderful opportunity and a very interesting way to start a day.
Thank you.
So it's been quite interesting, but I don't know if it's a vast if there's a vast idea on that. Does the federal inland revenue, now the National Revenue Services, accept this not the amortization, but you talked about
I think
decreasing, like
yeah,
when you get yeah, like when you get a machine. For instance, I'm running a factory and
yeah,
I bought my machine.
yeah.
In my plan, I should
Yeah.
know the
That's
lifespan of my machine.
depreciation, yes.
Decision, yes, I should know the lifespan, and then forecast how much I will sell it on auction, whether it's still functional or not. But by the plan, it's is to be sold, is to be displaced at certain points
Mm-hmm.
in order to reduce the cost of maintenance,
Mm-hmm.
something like that. Because I know that's what most companies do. You see them, they auction machines that are still okay, and you'll be wondering why are they auctioning it? It's still functional.
Yeah.
But now I get to know that they didn't just decide, is in the plan
Yeah. It
to
is.
be auctioned at that moment,
So
at that point in time, irrespective of the condition
the
of
machine
the machine. Yes, because furthermore, the cost of maintaining it might be higher.
higher, yes.
So
Them.
so in this case now, when you are doing all this, and I didn't know that you should prepare it and do these calculations before going to the tax office. Otherwise, you are over projecting
You're
your
giving them,
profits.
yes. Yeah.
So, but most times they don't get to correct,
they
and they will just accept.
yes, yes. It's to their advantage. The higher your tax, the more they make their money. So if you not do your work very well, that's why you need to have knowledge of accounting, one, or financial accounting, two, knowledge of uh, um, financial management and all that. Then above all, have an accountant, a good accountant, experienced one, who will do your work for you to make sure that all those things are captured from beginning. Do you understand? From beginning, because you're meant
Yes,
to, on monthly basis, is part of your expenditure. You're meant to charge that amortization calculation to your expenses every month, not even yearly, every month. So as you keep reducing every month, every month, every month, every month, it will flow naturally. And what I normally advise,
mm,
yeah, you have a separate account for your assets. So as you reduce, as the money is being reduced, the money is being reduced on monthly basis, is being sent to a particular account. You understand? To make sure that the money is kept for the
yes, sir.
to replace the machine. Yes. So after that period, the machine may start giving problem. Cost of maintenance may be higher, or it doesn't give you the quality you want again. You naturally sell off and replace. In fact, there are companies that are like that. The company that supplies it, they already know that this machine will be due on so months. That month, even before that month, they already sent a fresh one and carry the old one.
It's true.
Mm. So all those things are part of their listing. So
Thank you so much, sir.
you're,
It's
you're,
an eye opening.
you're welcome, dear. You're welcome. You're welcome. Okay. Further questions, further explanation. What area do you want us to touch? Please, what's your take home? Please, your take home, please. We'll be starting a new series by next week, by God's grace. Hello, please. I want to hear your feedback. We have less than 10 minutes to do that. Your feedback, what's your take home, please? Let's react to this. Okay, Amarachuku, rather, please, what's your take home? You've been in class.
Good morning, sir. For the past weeks, I've not joined. I think I
No,
joined last week.
today's own, not the weeks.
Okay.
Yes.
Personally, it's for my business or for my kind of business. I'm into service provision.
Yeah.
So for my home, is calculating maybe my equipment that I'm using to render my services,
Yes.
the calculation
Your chair. You have
stuff.
chairs. You have chairs in your office.
I have what?
Chairs, furnitures.
Yes, yes,
So you need to amortize it. You have print photocopy machine.
yes.
You need to amortize it. You are probably you
Okay.
have a car to run around.
Not yet, sir.
Let's say you will have a car because definitely going to get a car. You need to amortize it. Yes, all of
Okay.
them, everything, every single asset that will stay more than 1 year or that will have 1 year
Yeah.
lifetime, minimum 1 year, 12 months lifespan and above must be amortized, or else you're dashing government your money.
Okay.
Yes,
Okay. So for equipment that maybe like you bought some years ago and then their value now has increased, like in the market price now is higher than what
yeah.
you got it. How do you go about the calculation?
You still maintain what you bought it from. You bought it,
Oh,
yeah, 5 years ago. And remember, if you've used it for 5 years and it's in your record, you cannot you cannot amortize it again because its lifetime has expired. However, if it was
oh,
not in your record at all, so you can also make it as if you bought it now. Do you understand?
okay.
And start
Yes,
amortizing.
sir.
Yes. But if it's in your record, you've lost that. But if it's not in your record, you can now record it as if you just bought it today and amortize it for 5 years. Then,
Okay,
like I
sir.
said earlier, that machine, like in Nigeria, unlike other countries, in Nigeria where things keep going high, maybe the scrap value today, as you calculate, is 5,000. But in the next 5 years, that machine value may even increase to 10,000 or 10 to 15 or 20 or 30,000. So even as scrap value, you're making more money than the calculations. So that's Nigeria, that's inflation in Nigeria for you. Unlike other economy where things are more stable. So if the scrap value is calculated for 5,000 today, it remains 5,000 even in the next 10 years. So that's the difference. I hope you understood now.
Yes, sir. Yes, sir. Thank you, sir.
Thank you. Thank you. Thank you. Okay. One more person so I can call it a day. One more person. Okay, I have a question. I have a question. How many of us amortize our, or how many of us do depreciation, amortization, depletion, um, in our business? How many of us do that? Assets, our assets, both tangible and intangible. Okay, Steve, you have a question again?
No, you asked a question, sir.
Yeah, go ahead. Yes.
Okay, I do that, but basically on loan.
Okay. Yeah. Loan
I
is
do it
yeah,
on loan
amortization. Yes.
because I learned about amortization earlier,
Yes.
and then I do it basically on loan whenever I'm taking a loan, whether it's a free will, not a free will donation, rather uh, a
Non-interest.
non-interest, yes.
Yeah.
Even in a non-interest loan, I
Loan.
do the amortization, and it helps me to know what and what I is mine in my business. You
Sure.
know, then there were no tax reformation and all this we are having now.
Yeah.
So it helps me a lot to know what is mine, because the temptation of running a business without proper documentation is that assumption that everything is likely yours. Something happened with a friend. He runs a very big company, and then he wanted to travel to UK last year.
Mm.
So he used the company's account, of which he is a director. So
Mm.
when he got to the embassy, he was denied a visa. And what was the reason? The embassy told him that the consulate told him that yes, a huge amount of money is in the account. This account that you are a director to, but then there is no personal account of yours. We don't
Mm.
have any way you yourself make money, even though you are
Mm.
only a director to this company. We don't have a way that you make money. Now, left for me now, I would think, this person is wealthy. So when he came back, he decided to restructure the
Mhm.
way his company runs and then place himself on a salary.
Beautiful.
Understand? And
Yeah.
then he came back and complained that he didn't know that he's been wasting money. You know, the temptation is sometimes you see money, big, huge amount of money in the company's accounts, but you wouldn't know that not everything there is yours. By the time you apportion all of these things, all of these, create
Yeah.
separate accounts for those tangible assets, and you will never be struggling at any point.
Mm.
But at some point where the market is moving, booming, there is plenty money in the account, and then you start investing in unnecessary things.
Yes.
When it's time to expand, you also see yourself struggling because you had useless the money.
Sure.
It's
That's
not,
reality.
it was supposed to be something that is for the future, but
Mm.
because you're unable to recognize it, you spend it on something, you invest it on something
Yeah.
else.
Yeah. That's it. Oh, thank you so much. Thank you so much. In fact, a whole of learning today, a whole of learning today. Thank you, thank you, thank you, thank you. We'll be going into financial management. Yeah, I will find out by next week. Going to be a fresh one, and just get ready for it, please. Then, for those of us who are not alumni of Learn to Live, we will be opening the door once more for you to be part of us. We'll have a program coming up. And I want to promise you, please, in as much as you have your company and all that, I need you to learn geographical, uh, geographical movable assets. Get movable assets. How do I mean? Learn skills that are geographically movable. Yes. I know you may have land, you have everything, but please learn skills that are geographically movable. Very well. There's a reason for it. I will explain it some other time. Please. The world have changed. Not that it's changing. The world have changed. So the earlier the better for all of us. Thank you. remain fruitful. The week is coming already. Think of what you have today over the weekend.